Hello and welcome to today's webinar, Are You Prepared for ViDA? I'm Kelly Miranda and I'll be facilitating today's session. Today's presenter is Gunjan Tripathi, Director of Product Marketing at Vertex. Please direct your questions to the Q&A tool on the bottom right of your screen, and Gunjan will answer these at the end of your presentation. Let's get started. I will now hand over to Gunjan.
Thank you, Kelly. Welcome, everyone. We're rolling now for our live session on preparations for ViDA. But from a background perspective, I'm Gunjan Tripathi. I have been working in the industry of indirect tax for over 12 years now, and have my background in consulting, tax management in-house, and technology. And today we're going to discuss what that in the digital age that is going to be rolled out across the European Union, and therefore there is a lot of information out there. There's still quite a lot of debate and discussion. But before we move forward, I would like you to participate, and if you could help me get an idea of how you are participating with this polling question coming up next, that will be really helpful for the rest of our discussion. Kelly, please can we start the polling for this one? So I would really like to understand if your business seems prepared to adopt electronic invoicing, lovingly called as e-invoicing, as a global standard. And given that it has a lot of growing momentum after LATAM in the EMEA regions now. So you as participants today listening in, do you feel fully prepared and already using invoicing for your global transactions? If that's you, please select option A. If you feel somewhat prepared and are still exploring but haven't quite fully implemented it, you're in option B category. And then in case you're looking into it very early in the exploration, C, you haven't considered it at all, and you're quite satisfied on the current invoicing methodologies, that's D, and E in case you're unsure about the business readiness in general. So we'll give you another 30 seconds before we see what the results are like on this screen with Kelly. But as you can imagine, let's just assess how much we have already dwelled into this topic, even if it may be in regards to other parts of the world. I can see about 50% of you have voted by now, so please keep your clicks going. If you have just joined us live, we're just taking a sense check of the audience that is participating today. The question ahead of you is around your level of interaction with electronic invoicing as it becomes more of a global standard. And we have quite a few options there, one different from another. About 55% of you, those who are online and can hear me, have voted so far. Please vote it. We won't know who exactly voted for what, but it'll be a good sense check for the rest of the discussion. Another 30 seconds and let's close the poll. I do wonder what the results are like. I am expecting not the extreme of the spectrum, to be honest, but let's see what lies ahead of us. Kelly, please help me close the poll now. We have over 60%. So, of the 60% of you live who have voted, nearly 45% of you are in very early exploratory phases. So I think you're in the right place today, because we are not just going to discuss electronic invoicing, but a lot more that is changing around it, helping it propel it forward. Those who are ahead in their journey of research but haven't quite implemented could also take away some important nuggets as you prepare and work towards it. And of course, for those who are fully prepared, let's see if our notes match. And those relying on current methods and about the business readiness, we definitely have a few pointers as we go ahead. So moving on, first and foremost, I would like to take a bit of step back in what is the worldview as of today. So I use this term a lot. It's not coined by me, but it's called VUCA, which means volatile, uncertain, complex, ambiguous. That's just business in general right now. That's world in general right now. We live in very intricately connected business environments, supply chains, economic climate, and socio-political climate across the world that always makes business decision-making susceptible to externalities and its impact. So if you see your budget impacted, or if you see your policy being delayed, whether it be from a tax authority perspective or internal business policies, it is because the business leaders, the policymakers are constantly trying to calibrate with this VUCA world outside and trying to do their best for the business and for the tax authorities and for the economic conditions in general. So I always refer this as the reason why one has to keep moving despite certain uncertainties and figuring out a lot of complexity while working together in an ambiguous environment. And honestly, that is still the theme with a lot of regulations around that in the digital age in Europe, which also will have ripple effects for trading partners such as the UK, who's not technically EU anymore, and yet trades heavily with the European Union. And similarly, if you're located outside the European region as well. There are far too many development challenges that create new challenges. So if you have been in the world of indirect tax, finance, accounting, or IT teams who support it, of course, some of these themes are very familiar to you around whether it be Spanish SII or one-stop shops or import one-stop shops across UK, EU. UK has its own version of digital reporting around Making Tax Digital UK, real-time reporting in countries such as Hungary. Spain also, SII is a version of near real-time reporting. And then not to forget the standard audit files for tax that have been enforced in regions such as Poland, Portugal, Norway, and just to name a few across the EU. And ultimately, these do create challenges for business in the environment. So moving on, what does this do and why is, again, these changes happening? And it's ultimately because the European Union, when it does its economic modeling, is able to take a good estimate of the amount of VAT that it believes it should have collected, given the GDP in the economy, given the number of businesses it's aware of research-wise. And it does a decent estimate of, hey, how much should my VAT be? And it compares to how much my actual collected VAT was. The last time the study was reported, EU was still reporting 93 billion VAT gap, i.e. lost revenues for the tax authorities. So of course, it comes as no surprise that they would be making changes towards it. A couple of years ago, which was 2014-15 onwards, since these economic studies have been done, the VAT gap used to be as high as 150 billion euros. So the fact that tweaking and policy changes and some of the past legislation has helped reduce this VAT gap definitely gives authorities the confidence to keep moving and altering and adapting with the businesses and the moving way in which business is conducted across the board to help with that. Nevertheless, again, as a most recent version, that somehow equates to around 3,000 euros of tax revenue just in VAT lost every second across the European Union. By the way, UK have their own methods around it as well, so you can look up on the government website anything from 7 to 10 billion of GBP reported for the UK as well. Now, going back to my opening comment around VUCA, things keep changing while policy is not at the standstill or is figuring out how the business models are changing. And we are all aware we are using more internet today. We are using more digitally enabled services or goods or delivery. So all these new business models have completely changed the brick and mortar industry that used to be the norm for most businesses, whether us be consuming as customers or then selling as the sellers. So ultimately, it shouldn't come as a surprise that tax authorities are also have this realization that we have not quite digitalized all our policies, all our ways of interaction with the taxpayers. And in the absence of digitalization, which is the predominant way business is now being done, it makes it harder for complying. So the tax authorities are also embracing technology, and they're trying to make administration and reporting compliance less burdensome to the degree that is possible for them, given their own parameters of how they can work and where they can work and how much technology they are willing to invest in around these areas. With that came the ViDA model, that in the digital age. Now in December 22, it might feel like it's a long time away already, but this still remains a three-part proposal. The proposal intends to modernize and make the EU's VAT system more efficient, more streamlined for businesses. And most importantly, from a tax authority perspective, resilient to fraud or resilient to those VAT leakages from the economy and from the taxpayers' revenue collection. So first and foremost comes the continual digital reporting changes and obligatory changes around how you report your VAT summary returns, how you report your supplementary declarations around it. And there are a wide range of supplementary declarations that we already know of that are established, things like control statements, EU sales list, SAFTIs, or Spanish SII. These are all distinct yet examples of the same digital reporting phenomena that's picking up in the Europe. Then you have also to understand that a lot of fraud, so the missing trader intra-community fraud, MTIC as we call it, is often observed when the cross-border supplies are happening, because ultimately within the EU, goods and services can move freely. There aren't custom borders within it. So often it was observed that it's this cross-border trade where there was the highest susceptibility to fraud because of the common reverse charge mechanisms that allow for zero rating in one end, and yet by the time it's time for self-assessment and local domestic registrations to enable local tax collection, the party involved or the taxpayer involved could have just deregistered and could be nowhere to be found for collecting this VAT. Now, to ensure some of these changes are happening and there are more controls in the processes of the businesses, we've had a sea change of regulations in the past as well. So we have had e-commerce regulation changes. We have had regulations that request businesses to make sure they validate the VAT registrations and IDs and addresses of their trading partners. And the trend therefore continues of asking for more digital reporting requirements. So we'll see a trend towards real and near real-time reporting. I'll explain a bit more as we move further as well with more examples. But the second pillar of the ViDA is around the platform economy. Now, tax authorities creating policy and the ways to determine the VAT liability for platform economy is, again, not something new. We have had the e-commerce changes in 2021. We have had the changes for one-stop shops, enablers back since 2012 and onwards. So what is happening now that is different? Well, after the success in certain sectors, such as trading goods from outside the EU or within EU, small and medium businesses, the sector is now expanding to also include transport and short-term accommodation sector. What does this really mean? This means if you work in an industry or sector where you are a platform who is enabling a buyer and a seller of transportation methods or short-term accommodation, then the platform is now the deemed supplier when these rules go live. If you are in those businesses and industries, you might have to reconsider and revisit some of your business structures and perhaps your contracts as well with your underlying suppliers or business partners. Finally, the third pillar is around the single EU VAT registration. So again, in an attempt to promote more small and medium businesses to be able to do VAT compliance and stay compliant despite trading without the help of large businesses or accountancy firms helping them, or just having the bandwidth and resources to work with multiple registrations. They're allowing a system similar to the one-stop shop, which used to exist already, or the import one-stop shop as well. And the idea is basically you can deal with one tax authority across the EU member states instead of having to deal with all of them for relatively low value supplies or low volumes of business, which do not require you to put warehouses or permanent offices in those countries anyways. So it's, again, to facilitate the new types of businesses that have emerged across the world, and yet to promote businesses from continuing to grow within the European Union, yet leveling the playing field with some of the existing businesses. So these are some of the themes behind these initiatives. Please make no mistakes, these are still proposals, and they are being heavily debated with the European Commission and all the member states. Over 300 amendments have been requested and are being talked about. So we'll go through some of the areas that we think are the most robust and quite well-intended and most likely to go ahead. And then we can also discuss and critique some of the areas around which there could be more changes in the final regulations as we see today. But before we jump into a lot of detail, I would open up for another polling session. What function describes you best amongst the audience that are tuned in today for understanding and learning more about ViDA and electronic invoicing? So are you a finance or accounting persona? Are you from the IT teams? Are you from a legal background, helping compliance and risk in general across your business? Or are you supporting procurement with the rest of your teams? Are you directly responsible for taxes, whether it be direct or indirect, advice or compliance? Or even if you support tax or finance technology. And last but not the least, if you are a third-party advisor or service provider, helping your customers understand these regulations better. So just getting a sense of the various walks of profession and life that you join us in would, again, help shape the questions coming up as well. I can already see some Q&A starting to appear. I can also see some of you have responded in the Q&A. You can answer on the poll directly if you are trying to respond to this so that it can get counted. We have about 57% of you who have voted. Let's get you over the line of over 60% just to allow for a true representation. Another 30 seconds before we close the polling, and we'll of course be able to see your peers come through. All right, let's close this poll, Kelly. We are well over 60% now, so we should have a good idea of where we are. So, a lot of you are from finance function, and a whopping majority of you are from the tax functions. And it's great to see some of the IT folks being involved here, because ultimately, as we move forward and look at the intricacies of some of these regulations, it'll become very evident that while it's tax regulation driving the need for changes, but within any taxpayer organization, it's a cross that cannot be borne solely by the tax team. They have to work with finance processes and controls. They have to work with IT systems to make it all come to life and work in a way that it provides information and visibility to all teams, because ultimately the underlying data is essentially your source of truth. So this is a very good mix of individuals today participating. So thank you for joining again, and we'll continue to dispel some of the understanding around it. So moving on, I would like to highlight that, again, why is this going to go ahead? Why will these regulations take effect? Because again, from a perspective of return on investment for the tax authorities, they've of course done some predictions. They have of course looked at, will this really help bring that VAT gap and the additional revenue that they are chasing? And this is what some of the modeling of the European Commission tells us. They expect that this could help them raise over 110 billion of additional VAT in years to come. It could help bring up more savings around ability to do reconciliation across these various data pieces, so savings, and in some ways helping businesses who may not have digitalized or transformed digitally their areas of tax reporting or invoice processes to come on this journey with the pull from the perspective of tax regulations. So those are just some numbers which we hope you could use if you're having internal discussions and raising awareness amongst your organizations, whether it be your C-suite or decision makers, that, hey, this is serious and this will start to unfold itself. And please make no mistake, it is not going to be something which is big bang one day. A lot of these discussions are already in process. While there will be deadlines by which all of these things will have to work out, most of the member states and countries and their local tax authorities are already reverse engineering what they can put in place today in their local areas and local reporting requirements that ultimately brings them to this harmonized level of working around the ViDA proposals. Moving on, I would like to draw your attention, since we come from the world of VAT, tax and also finance and IT that, again, like a lot of other processes that we have across tax, that are not equal and interchangeable in one country to another. The same we will see with the electronic invoicing and electronic reporting models as well. So you could have places where your entire supply chain and your vendors and suppliers invoices will actually go through the tax authorities before it reaches you. So you need systems that can talk to the tax authorities and ingest data and interact with them. That's near real time. That's really interrupting and impacting the cash flow of the business as well. So something worth paying attention to. You have other models that France, for example, is talking about, although France's dates have moved twice this year, but the fact that they have gone into already this level of detail and are also looking at testing their models, this is definitely worth investigating further and keeping an eye on. In future, tax authorities want it to work for information flow in an interoperable manner, and where one country could exchange information with other. So they will leverage other standards such as the PEPAL networks, and then the access point pieces will become even more important for the businesses to understand and to work with. And everything on the blue, which is on the left-hand side of your slide, you see are data that you will have to work with and processes even before you complete the journey of invoice issuance. There will be different countries, such as those you have in Spain and Hungary today, that I have put on the right side, where the data to tax authorities is happening after the invoice issuance. So you can see that there's still that arrow 1, which is between the taxpayer and the recipient, i.e. a supplier and a buyer. And the tax authority reporting is in parallel. Imagine all of this is happening simultaneously in different countries, and you're an organization who has a skin in the game in multiple countries. You have to start thinking now how you're going to manage your data, how you're going to work with your, again, IT, finance, and a lot of process stakeholders around this to ensure that the business continues to do business and is also able to stay compliant. So you can imagine this is exactly why there's still a lot of debate. A lot of businesses have been giving inputs to the European Commission and local tax authorities as well about readiness around it. So I hope if you are severely impacted or you're a large enough business who really must make an input at a commission level or at country level, please continue to interact with your advisors and your tax authority contacts. Moving on, I'm going to change gears quickly and talk about from a perspective of life of an invoice. Say a typical invoice on the AP side, so I am the buyer. I have a seller who has sent me an invoice. So if I'm a buyer, I've definitely gone through the process of procurement, purchasing it, receiving the invoice, checking if all the details are correct, recalculating tax on it if need be. If there are foreign currency issues on it, then I might have to recheck or override systems sometime because, again, there's a lot of VAT regulations around it and local currency regulations. And then eventually I make the payment to my seller. Now, all this is before the world of even electronic invoicing gets layered upon it, which is one of the pillars of ViDA. The other side of it is digital reporting, which means a lot of this information now needs to be reported in certain standard formats and schemas to the tax authorities for reporting elements, which means you'll have to be really on top of your data hygiene and data capture methodologies and processes. So it's usually not unheard of that the upstream data gaps are often uncovered when the downstream reporting requirements are very close to going live. So please don't be caught out by that, and maybe that's some of the preparatory work you can start early on. Ultimately, all these changes mean that the business has to be in that mode of continuous compliance. I'll do my corporate tax once a year, I'll do my VAT return once a quarter or once a month. Honestly, those timeframes in the world of VAT and reporting are disappearing. We have come down from a month to about 1 to 4 working days processing time. So in ViDA, for example, the current proposals say 2 days, just 2 reporting days for turning around and informing the tax authorities about your transactions. How's that possible? The lot of consensus and a lot of pushback that has gone back to the authorities has been around, well, we need a week, we need 2 weeks. These are examples of some of the amendments that we will see and come through when things continue to move on and we hear final versions, not just from EU Commission, but from local member state level, because ultimately they do interpret the EU Commission proposals, and then they have to make sure that certain VAT directive changes happen as well as local regulations change. So what would this continuous compliance cycle look like? You would have a lot of work around invoicing, making sure your transactions work, making sure that your areas of VAT compliance and invoicing are all working together as well. And this will become a journey from one to the other. Want to take a deeper look at what that could look like. For example, if it was to work in our environment with Vertex as your tax technology partner. Of course, the vision is to use that single truth and source of your data from your typical ERP systems, bring it into the reporting and returns consolidated portals, and then start to segment it out based on different countries and whether a data is strictly required for summary and periodic reporting or after the invoice event, or whether it actually needs to be that pre-invoice issuance event or right after, in which case it might have to be going across both the versions of compliance and invoicing. So we are today partnering with the Pagero network, and we are going to bring all of these requirements around all network accesses, certifications, interoperable models, delivery to your customers, whether they be in business to business or business to government environments, and then ultimately also the reporting leg to the tax authorities. Then you'll have the ability to also reconcile it back into your summary returns. So all these will be quite a demanding task for compliance going forward. And one thing is for sure, the days of manually wrangling the data, reverse engineering manually what the tax authorities need, it's just not going to happen within the time frame that the regulation is heading towards. So leveraging tax technology will become quite imperative and necessary to stay compliant, and will have to be seen as cost of business and cost of compliance. And this is why we should also start looking at the upside and the gains and what other efficiencies and benefits this can bring to the business so that you can kill multiple birds in a row. So, for example, with our solution, you can work in one place as a single global solution for your VAT needs. You can leverage the information and power of the latest invoicing content in these different countries as they develop, because it's already ingested in the logic there. You'll be able to bring in data from various ERP systems, whether it be in different formats or not. So having an agnostic player here could help you, given you might have very different IT environments currently. You definitely need very secure interfaces for this, because ultimately this is very sensitive data that will have to go through third parties and to tax authorities, and there should be firewalls available and fail-proofs available. You also don't want to be in different places doing different activities when they are ultimately intrinsically interconnected. So having the end-to-end process in one place is important. So again, Vertex Invoicing in partnership with Pagero will be able to help solve this for you, because we're bringing the best of two worlds for you on a platform. After all, everything is done and dusted, you of course need the ability to archive and report. So this will also be available in the solution. And when there's too much data flowing around, the ability to look at what it says to you at a macro level, consolidated level, is another need of the hour around it. And of course, not just your AR invoices. Please remember these regulations also impact AP. So all your incoming invoices are also going to be impacted, because your suppliers have been impacted by these regulations in different countries. So something to bear in mind, because even though you may not have to produce some of the, say, electronic invoices, you will still need to be able to consume them. You might still need to be able to digitally report around them. So the business requirements are quite invasive with these changes. Of course, as I was saying, it has to give you an upside within the business, so it can do away with your complexity challenges, your compliance challenges. There's just too much moving, too much happening, so it helps you keep pace with it. And last but not the least, capacity challenges. Again, this simply cannot and should not be done with manual efforts. It's best to leverage the best of breed technology to help you alleviate and plan in a holistic manner. So our invoicing solution in partnership with Pagero will help you have a world-class solution around comprehensive VAT compliance. You have one single vendor to work with, while the vendors behind the scenes work together to give you the best service. You don't have to worry about where are the various changes happening, how you'll get the various clearance and submission models. Again, we make that our problem to solve for you. You can bring various data extracts into the system, agnostic, different countries. We can help you with all the archiving needs around it and cover all the requirements around reporting. So that leaves us with quite a lot to cover, of course. So I'm going to move on quickly into some practical tips around this if you are involved in these businesses. Of course, goes without saying, you have to monitor developments. EU proposals are constant, ongoing, and yet there is increasing commitment from every tax authority to work towards it. This is why you're hearing more and more, oh, Romania is about to go live, Poland is about to go live, Germany and France are already thinking about their dates, because these are all the ripple effect of those EU-level changes. That's the end state. Currently, everybody is working in the interim state. What else can you do in the interim? Of course, you can work towards cataloging processes. So irrespective of how or where you are in the business, making sure your invoice processing, whether it be for APAR or even intercompany, is cataloged well. You have evaluated your current billing mechanisms, incoming, outgoing, to know where is it that you will have to make system level changes. So as I was saying earlier, you have to work closely with your finance and IT folks to figure this. This is going to be quite the multidisciplinary project when they go live. And you don't have to tell us, you don't have to tell the tax authorities, but doing all the above will let you know where your typical procedural weaknesses are, and you can start benchmarking against industry practices and the best practices. And you would know the limit to which your manual workarounds today will survive the pace and the change upcoming. And on a personal level, I would say, again, get into the project that are multidisciplinary in your organization today, you will start to learn the language, the ability to cross-pollinate best practices, and start making some noise, because there's a lot to be consumed here. So while you're learning with us, you'll also have to take your business on a journey of learning there. Finally, aim for the ideal, aim for the end state. We have a saying, want a puppy? Start asking for a pony. Automate, automate, automate. Manual processes are serious risk to non-compliant, serious risk of non-compliance. And then ultimately, better to stay on top of these things, because prevention is better than cure. So start looking into data quality right now. Start looking to how to get your tax and invoicing and billing and reporting right the first time. So that was a whirlwind tour. I'm just going to finish off by, again, introducing ourselves as a company. We offer compliance solutions for multiple countries, and we've been in this business over 45 years. So these are some of our credentials around it. We have been in this game of understanding your indirect tax data. So we can support you because we know where to typically look for it, because we've helped various organizations. We have a tax research team that really plugs into our information. We've also worked with our partners, Piguero. So we just keep expanding that knowledge to support you. And with that, I think it'll be a good time to move to Q&A. Kelly, how are we doing?
Hi, Gunjan. Yeah, we've had quite a few come in, so we won't be able to cover them all. But I'll put a few to you now, and any others we will come back to you all regarding email. So let's get through as many as we can. So the first one, will a reclaim of input tax be possible in the single EU VAT registration?
Great question. As of now, we understand that it has not been possible, and amongst the debated item, this is one of the top ones as well, because this is what will ensure wider adoption or not. So that is a regulation worth watching the clarifications for. It could also mean that depending on which local tax authority your prime registration stands with, that central single registration stands with, will also have a lot of sway on what's included or not. So yeah, not everything is clear on that one. It's still work in progress.
Great, thank you. Next one, when you refer to short-term accommodation sectors, does this apply more to hotels, or does this also include universities where we are providing accommodation to students?
Now, student accommodation, it could be one of those areas where the legislation needs greater clarity. The term that has been typically used in identifying short-term accommodation is that they are allocating the number of days for which, beyond which it will not be considered short-term accommodation. So proposals are talking about that 30 to 45-day period. So typically, if it falls beyond that, then it wouldn't, but anything lesser could get stuck in this segment. But please be aware, again, if you are a university and it is your accommodation, then again, the rules are different from your universities in it's a platform that is enabling a complete third party to provide accommodations. Again, those regulations are going to vary, and one worth taking a deeper look at for sure.
Great, and I think we've got time for one more question. For businesses that transact globally and are based in the UK or US, where e-invoicing hasn't been made mandatory yet, what steps should they be taking now to prepare for this European shift towards e-invoicing?
So you have to understand that even if you are a business who's headquartered in, say, UK or US, but if you're a business that trades into the European Union or into the other countries that are also coming up with these mandates, you should evaluate whether you are within the scope. Because typically, if you have those non-established VAT registrations that are for all purposes of reporting domestic VAT reporting requirements coverage, then you could probably get caught out on these regulations. If you are trading with other businesses, that are located in jurisdictions which require them to only accept invoices that have come through these models, then of course, even though in your home country you're not impacted, you will still have to take a look and adhere to these or get support locally. So those are some prime examples of why and how, if you're a business that is trading with the countries that have these changes coming up, it is the time to watch out. So yeah, again, not a straightforward answer, and something that will have to be mapped out in intricate detail based on your unique business environment and your trading partners.
That's great. Thank you, Gunjan. That's brought us to time. So thank you for your time today. And this concludes today's webinar. We have many questions that we haven't answered, and these will be collected and will be followed up by email. So enjoy the rest of your day. Thank you for joining us.
Thank you, Kelly. Thank you, audience.